Hi, this is Jack from AlphaCharts 365 with your State of the Market update. Before we get started, this is not a recommendation to buy, sell, or hold any stock or security. This is for informational purposes only. Today is December 14th, 2019. Okay, so we're going to start with the SPX. So the S&P, as you can see, is in a beautiful uptrend, closing at all-time highs. Nothing bearish about the SPX. And going to the Qs. Very similar look for the Qs, actually outperforming just a little bit, closing at all-time highs once again. Nice uptrend and a lot of good volume coming into the last 2 days of the week. So really nice to see. Again, going through these kind of quickly because we've kind of seen them before and the uptrend continues. On the IWM, the Russell broke out, retested, moved higher, and now is actually consolidating within actually a pretty nice range right here. We're starting to see volume come in and a little more volatility within the day, but the uptrend is intact, and my expectation is that this continues higher, probably at the very least to try to hit all-time highs, in my opinion. So the Dow Jones Composite Average has a very nice consolidation period here, but all the moving averages are moving higher. Even the 23-day EMA is curling back up again. So I would expect this also to continue higher beyond the 90 to 83-ish area. Now let's look at some important sectors in the market, because I think that will tell you how healthy the market is. First off, financials. And even if I go down to a weekly chart just to see this a little bit easier, I mean, unbelievable, right? 2007 highs over here. We hit them, backed off. Now we're hitting them again, right? Third time it's being tested, or fourth time. If you count this, 1, 2, 3, 4. So what would be the most bullish scenario here? The most bullish scenario is for this to pull back, maybe to hit the 23-day EMA, maybe go sideways here. That'd also be very bullish, and then break out, okay? So we don't want to see a breakout here. If we do, it'll probably fail, come back down, find support, 29.15-ish or so, maybe 29.30, and then it's going to go higher. That would be my most bullish scenario for the XLF, and that would bode well for the small caps and the market as a whole. Looking at next up is the semiconductors. Now on the semiconductors, we had a huge breakout, lots of bullish volume coming in here. Everything is up, turning up. Semiconductors are in everything in our life, in our environment, and so this bodes well for the market overall. Lumber was at a place of importance or prior importance, and as you can see, we went up, came down, went back up, hit it, did a nice sideways consolidation. 23-day has kind of caught up to it, and now it's trying to break out above this area. All the moving trends are higher. Lumber, again, whether it's housing or other building in our economy, which bodes well for jobs and the economy overall. This is an uptrend, and a move higher here, again, would be a very bullish scenario for the market overall. Now the put-call ratio, switch to a line chart to make this easier to see. We got pretty bullish over here, right? So, puts up here, calls down here, right? Put call. So a lot of call buyers, and this is getting to be a little bit frothy. So even though everything's an uptrend, nothing goes straight up. Would I be surprised if there's a shakeout or something to kind of shake out the excessive bullishness that we're kind of seeing in this ratio? I would maybe the week before Christmas, the week that we're heading into, that would be a logical time for something like that to happen. get this more in the middle range over here, where it likes to kind of hang out, and that would be logical, and that would also be a nice end of year, set up a nice end of year rally. So that's just something I'm watching. The SPX TLT is something I watch, again, just for a risk on, risk off indicator. And it has broken out, retested the trend line, and is moving higher. All the moving averages are moving up, so to me this says risk on. We're going to look at the VIX also. The VIX is in a bullish range. I use 16.5 in that general area, maybe 16ish, to denote bullish versus more volatile. I think if it's below this 16.5 area, I think that that there's a good possibility that this is going to trend, right? Not see too many shakeouts. Now a big spike up over 16.5, 17, and that would change my that would change how I view this market overall. Now the last thing I'm going to look at is going to be the S&P versus the entire world minus the S&P. Okay, so it's the United States versus everybody else, right? Minus the S&P, so we're not included in that. And you can see this uptrend has been going on since 2010, right? We, the United States, have been outperforming the market the entire way. Again, along the way, there were down times, and they were pretty significant. So as we look in the market and as we work in the market, we want to find the times of outperformance, whether it's in the US or anywhere in the world, because it doesn't matter. And so what did I notice here? Now, when I look at this ratio, I like this high right here, then I notice a higher high, and now we're breaking down below the 23-day EMA, which is curling down, now back below the 65-day EMA, and that looks like it wants to start to curl down. So here's the 150-day right here. If we break below the 150-day, which would also be below this level right here, it would confirm that maybe there's opportunities outside of the United States that we need to be aware of. Is the uptrend still in place? Absolutely. So again, knowing your time frame is important here, right? But if you're looking for a swing trade over the next maybe a couple weeks, maybe a month or two, this is a possibility, especially if we come back and try to retest the uptrend line, which is, right around here-ish or so. So we can have, doesn't mean that the United States is going to go down. It just means that there may be places in the world that are going to be going up faster than the United States. That's all that means. So again, know your risk tolerance. Most of those places will be riskier in general than the United States. They could be in emerging markets or less developed markets. So you have to know your risk tolerance. You have to know your time frame. But I am going to in tomorrow's video do some relative strength analysis on different country ETFs and look for which ones may be setting up for an outperformance, maybe for a trade. We're also in tomorrow's video going to look at the S&P sectors and maybe some subsectors to see where who's outperforming and maybe where the best risk reward is for market participants. So I hope this video was helpful, and I hope you all have a great night. And check out my video tomorrow on those potential opportunities.